I think since morning we have spoken a lot more about that instant credit, especially more towards that individuals or MSME unsecured loans. So largely lots of discussion has happened. If you look at the home loans, primarily the bigger lending market share, right, in terms of that entire the lending portfolio, and it's still at the most complex product when it comes to the lending, right? Because lots of the dimensions from the property comes into the play. So I think that's where that I'm here, and it's a pretty mixed panelist, and it's a lovely panel with the bank representations as well as that tech or prop tech, which is again a very interesting combinations, and I'm also very curious to hear it out that what is this primarily technology is going to play the role. So without taking much of the time, I'll just get started into the discussions with starting with Naren sir. Naren sir, I think you have been in the home loan industry. You have seen very closely, right? How do you see the entire that home bank-led, especially the banks from the banks, how the entire that home loan model is evolving, right? Especially in the terms of the adoption of the technology, as well as continue to manage the risk because it's still it's a pretty risk-prone kind of the lending product, right? So maybe you can just share your thoughts and maybe just quickly introduce yourself and for the audience sake, and then just share your thoughts.
Good afternoon. This is Narendranath Mishra. I head the retail and agri loan in DCB Bank. So home loan, if you see, there are broadly two segments. One is where we do verified income, and the other is where you do assessed income. So verified income, it is quite simple. The income is available in the ITR or in the salary statements. So credit appraisal is quite easier. The real challenge which we face is in the assessed income, where the income is not available in the ITR, and the borrowers are small ticket borrowers. So here the credit evaluation needs to be strengthened, which is based on personal discussions, appraisals, and available documents. So earlier the data points in which we were doing that was quite limited, and it was based on the more on human skill. Today, if you see, this is evolving from human skill to data points. So today it's I would say it's 60-65%, two-third kind of thing is human, one-third is data, even for this assessed income. And as you are evolving, maybe next time or next 1 or 2 years when we are discussing, that will be 50% data and 50% human touch. And gradually, there will be more data points based, which is BRE based evaluation, lesser human intervention so that the mistakes are not done. And the second risk, which is there in case of a home loan, is the property risk and the legal risk. Most of the states are now going for the digital transformations, where the land records are getting digitized and automated. As the land records are getting digitized and automated, there are lesser chances of fraud, there are lesser chances of double mortgage. And the second one coming to the valuation. Today, if you see, there are a lot of PropTech players who are coming, who are using the data which is available for 1 or 2 decades to come to the pricing. They are using the IGR, which is essentially the government sales data, and helping us to do this valuation more scientific, accurate, and appropriate. So these are the evolving trends which is helping us to mitigate our risk and move into more data-oriented appraisal and monitoring. Lastly and more importantly is the recovery. So recovery, which was based on people, gradually it is moving towards online, digital, and more preventive than curative. We are using data to find out the customers where the vulnerability high, so that can be assessed and the risk can be mitigated.
Thank you, Narendra. And I think, Narendra, you brought a very critical points, right? In the home loan process, it's not only about that individual that you are doing assessment, right? You are also doing the assessment of the property, right? These two are very critical, goes into the entire risk part of it, managing. So I'll continuing with the discussion with the bankers itself. So I'll come to the Priyam, continuing the point that how do you see that use of the data as well as the technologies is trying to address some of those risk element, as we have been talking about, that both property as well as the individual assessment has to be done, and especially more from the portfolio quality perspective.
Yeah, so the Narendra highlighted about the SS-based model where you don't have a proper income captured in ITR, etc. There you need to rely on the cash flow analysis. You also need to rely on the ancillary data or the alternate data, there are gig workers, where the cash flow might be coming in, not in the form of salaries, but if you have to assess and give home loan to them, you have to look at the other data that is available with you for anybody. So more and more alternate data is becoming important. That data throws, some kind of a risk scoring, on the basis of which the lenders are now, giving loans on. So be it risk score, be it risk assessment, be it risk-based pricing, assessment is happening on the basis of such empirical data. And that is ensuring faster TAT, that is ensuring more scientific way of underwriting a client. Assessment becomes more data-driven, and that also ensures much better portfolio quality. And therefore, while this segment has grown in the last 10 years from 9.6 lakh crores to now 40 lakh crores, our NPA is only below 1.5%. And estimates with the current growth rate says that this 40 lakh crore will become 80 lakh crore in the next 4 years. So which will only happen with this data-driven, faster TAT approach in assessing clients.
No, thank you, Prem. And I think I'll come to the Vivek. I think 5 years back, nobody would have thought that there is a tech guy is going to sit on the panel and talking about that digitization of the property side, right? Because it was so very much manual, right? So I think, Vivek, property is very diverse, right? If you look at it from the property in Mumbai is in a residential complex to the tier 6 cities where the kacha pakka kind of the makan. How do you see that that technology is going to play the role? Probably they integrate the entire real estate property data into the process, the models the bank has laid down or the NBFCs have laid down.
Thanks, Shashank. So let me introduce Square Yards. So Square Yards is one of the largest PropTech platforms in the country. We sell close to $2 billion worth of real estate every year. And our subsidiary Urban Money is one of the largest lending fintech in the country. This year we are going to disburse close to $9 billion worth of loan. So we are very close to this real estate sector, and we see transactions day in and day out. And what we observe, like while selling this many real estate and this much of loans, what we found that the home loan process at a very fundamental level is broken, right? So I don't know how many of you have purchased property recently, but if I have to guess, like how many days it took you to actually, after buying a property, to take a home loan? Probably like, any guesses from the panel? How many days it took you, like people who have taken home loans in last few years, how many days it took you to get a home loan processed? The first 1 month? Yeah.
2-3 days.
Okay, so on an average, what we see from our data, on an average, it takes around 30 to 45 days on an average. And there are probably 5 to 6 people that you would interact with, okay? So one is, of course, your property broker, then developer, the DSA, the mortgage broker, then there is a relationship manager from the bank, there is a valuation guy who comes to your home, then there is a disbursal guy, right? And the customer has to actually go through the process with each of these guys, these multiple touch points again and again, right? And there is a whole set of documents which are made, and then these documents are, by the way, physical, and signatures have to be done on hundreds of these documents and then submitted to the bank. And then bank takes its own process of underwriting and then doing a dispersal. So, and compare this to a personal loan, or the previous panel was talking about commercial loan or a car loan. You walk into a car showroom, right? You buy a car and you get your loan process then and there. So essentially, what we are looking at is how this whole process, the customer experience which is broken, and all these multiple interactions, can these be brought down? Of course, there is a regulatory challenge, and you have to do property assessment, you have to do valuation, you have to do title search, you have to also assess the individual credit worthiness, which thankfully is getting digitized. So looking at each of these processes, how can we actually reduce, what role technology plays and what role data plays to digitize these processes and make the customer experience better. So coming back to a question, Shashank, so probably in a few years down that line, as the land records, as Naren sir also was saying that different states are at different stage of digitization, and a lot of real estate, property related sector is, data is also being digitized. So how can we reduce this TAT, reduce the cost of customer acquisitions for the lenders, and also improve the overall customer experience? So that's the role technology is going to play.
Thanks, Vivek. Lovely. Now coming back to Amol, if you can introduce yourself, and also since as a bureau, right, you are central to the whole of the lending process, right? And you have seen the lenders very closely, that how they are leveraging the data. So from your experience, how do you see that banks or the NBFCs, the lenders, is leveraging the data and analytics more to refine their home loan or the lab journeys for the betterment?
Thank you, Shashank. And my name is Amol Joshi. I'm the CFO at TransUnion Sibyl. And as we heard from my esteemed panelists, I think the journey to take that credit decision is always something which they grapple with. There's a high touch point where the property has to be assessed. Then the whole credit setup of that borrower needs to be looked at. But at the heart of it is a customer who has made an emotional decision to buy that, who has made an emotional decision to buy that house. And there's a lot of engagement from the customer side. And to hear that it still takes more than 2 to 3 weeks for that decision to fructify and that deal to consummate is pretty sad to hear. So at Sibyl, where we are at the heart of that whole credit decisioning process, what we try to do is to partner with all lending institutions through their whole lending life cycle. We are the intelligence partner embedded in the process. We try to ensure that we are able to enable that decision to be not only fast, but also at the right quality. Because all our customers are looking at growth, returns, and obviously ensuring that the risk is minimized. So the whole growth, risk, and profitability part is something that we enable. We ensure that in the lending life cycle, right from prospecting, ensuring that the customer is adequately dimensionized, meets the customers, which are the lenders, credit risk profiling that they want to do, and then an appropriate decision is taken, which is whether to give that loan or not to give the loan. So at Sibyl, considering the wealth of data that we have, what we try to do is that we have a lot of trended information. We work with our customers to ensure that whatever is the risk profile of the customers that they are looking for gets embedded through the data that we share with them. For a customer, if they're looking for a particular score or a profile or trended analysis, that is something that we provide to them, and also allow them to take that call and enrich that data whichever way they want it in terms of the outcomes. Like just to give an example, currently we are looking at a price sensitivity index, because a lot of times lenders take the decision that for this risk profile of customers, this is the rate at which we'll give an interest. And that customer actually just says, no, this doesn't work for me. I will go and take that loan from somewhere else. So for a difference of 10 to 20 bips, which the lending institution can clearly provide and move on with the lending decision, they lose the whole customer, and the investment made in not only getting the customer to apply and the time taken to assess it really goes away. So those are the kind of insights we are able to provide and allow the lenders to take the right decision.
Thanks, Amol. So it was a good initial perspective. Now, again, continuing Naren sir, I think this home loan, again, you spoke about, right? Either any individual is trying to buy a home loan, or the business, again, who is buying, mortgaging the home property to take a loan. And within that business also, you will have different customer segments. So even in individual, you will have a very different customer segment. So when you're trying to build or trying to build digital part in the home journeys, home loan journeys, how do you take care of the design aspects to address the different experience for the different customer segments? Like, it's not like your personal where you can have a straight line, one single journey. So how do you take care of, what are the factors that you consider?
As I spoke earlier, broadly there are two segments. One is the verified income and the other is the assessed income. So verified income I will not touch, because those are the customers like us who are in this room, where the income is very bad and very easy to lend. So assessed income are basically small traders, service providers, and many of them are not liable to pay income tax because their income is quite low, but they require the credit facility both for business and for home loan. So what we need in the digitization of AI is that how do we assess their income? So just to simplify, there are 1,000 types of trading business. It can be selling pens, it can be hardware, it can be FMCG, like the Kirana shops. So for these different types of trades, how is the income to be assessed in a systemic manner, including the geographies? A trader in Mumbai might be making much more money than in a small town in Bihar. So how do we build a model which accurately estimates the income? And it should take the stocks available, pictures, various data points, and come to some kind of broad guideline providing accurate income. The second challenge in this segment is expenses. Here also they don't keep track of their expenses. So ultimately the loan servicing depends on the gap between income and expenses. So there must be a mechanism to find out what is the expenses for this type of business in a particular city. It can take the consumer price index, the living standards, cost of living in a particular city, and various other parameters. So if this can be built through automation and AI, that will be really helpful in giving them the right type of amount of loan and meeting their credit needs while mitigating the risk for the financiers. Now the second aspect of it. Second aspect is that how do we communicate with them? So communication here has to be multimodal. These customers need education from the time they are onboarded. They need to be assisted in the digital journey, in the automation journey, and we need to have a human touch while doing this. There should be localized multilingual videos, which we also experimented in DCB Bank about customer education on repayment both for farmers and traders and these kind of customers. We find that the customer behavior changes once they're educated. So how do we educate them continuously, give them reminder without disturbing them, and enable them repayment through digital and alternative channels? So by this, we will be able to complete the cycle. Lastly and more importantly is about transparency and adequacy of communication regarding various charges so that the customer is aware various charges which is involved and rightly explained. So this enables the customer to take a choice which he makes himself. I think these three elements, if we are doing for this kind of customers, it would be both useful for the lender to build a good portfolio and also for the customer to enjoy this facility at a good turnaround time.
Thank you, Ras. And this is very interesting. So, Priyam, I'll continue with that. Narendranath sir said that right, for the different kind of the customer segments, the communication part, be it on the onboarding process and the giving the loan during and as well as the continuing the relationship, right? Human touch and assisted that need to be built into the whole of the journeys. So, in terms of the leadership perspective, right, how do you see what are the different process capabilities or the technology capabilities the lenders need to evolve for that within the home loan in the next couple of years in the future, right? What are the capabilities are getting evolved?
So I think first and foremost, everything is going to be end-to-end digital, from onboarding to KYC, which is already happening in many places, to credit underwriting, scoring, as I mentioned, to disbursement, and eventually even the collections, even the foreclosure letter. Everything would be digitized end-to-end. So the organizations will need to upgrade their technology to that effect, that everything is done end to end, and that capability should be there. Two is capabilities on AI, which everybody is trying to develop and wanting to develop, because a lot of credit underwriting would be AI based. If we are talking about getting huge volumes, and if you're talking about working on a data repository, a lot of AI would come in place for credit underwriting part of it. So that needs to be upgraded. Three, I feel eventually blockchain would also be an important component once all the land records are digitized. Once, right now we have around 19 states where, digitization of land records are happening. But if everything happens, and I think, there's an RBI sandbox also working on it, then there'll be integration with the bank or the HFC to, to the DigiLocker, to the state's land records, and there'll be a ledger-like system, for which again a blockchain technology will be coming into play. So valuation, we are talking about valuation. Already there are a lot of players who are giving it in a digitized format. They're using artificial intelligence already to give you the valuation of a particular locality in a particular city. And again, they have various data sets to also measure if the property price has increased or decreased in that area. So that will get even more fine-tuned, with more and more adoption of such fintech platforms. It will get fine-tuned and throw much more accurate data. So banks need to have open APIs, and very smart technology to integrate with all such developments which would be eventually happening. I think the land records bit might take some more time to, but in the next, if you're talking about the next decade, all of it will happen. And these areas need to be upgraded. I feel a lot of investment will go here in technology piece because a lot of systems, are still legacy systems in our entire ecosystem. And a lot of upliftment there needs to, happen. Having talked about the digital journey and complete end-to-end digital journey, I would also like to highlight that the need of human being will not be in any way going down in future, because the customer will still want to ensure that he talks to some relationship manager at various stages of because home loan is a 15 to 20-year loan. And if you want to keep it on the book for a very long time, the customer would want some kind of human intervention, or at certain times, when he also wants to talk to somebody. So that model will also be there. Last but not the least, I want to highlight on the data bit. So data privacy, as we get more and more data with us, data privacy will become of extreme importance. And banks and any which ways, we have the DPDP Act now. So banks, HFCs, they all need to also protect the customer's data, and the customer should feel that the data is definitely not, going out. That is another important area that banks need to upgrade themselves.
Thank you, Priyam. So continuing this technology discussions, Vivek, I'll come to you, right? I think Priyam sir has given some kind of the pick into that future of that entire the technology is how it's going to play the role. But you being at the center of real estate as well as the data player into that space, how do you see that future capability is going to evolve, which is going to take that entire the home loan journey to the next phase? If you can go a little more deeper for the audience.
Yeah, I think a lot of this was covered by Priyam. So when the land record digitization happens, the data would become digital. So, but let's look at the current data landscape. What do we have today in terms of data availability on real estate? So essentially there are 3-4 sources of data. So first is your SRO data or the IGR data, where the transactions are being recorded at whatever prices, A component, B component, but there is a record of the transactions. So, but if you look at this data, this is a public record, but this is not in a very consumable format. You have to go to IGR website, put various factors like various input parameters like khata, tehsil, CTS number and all. So it's very difficult to actually get for an individual or for a valuer also. So what we have done is we have actually digitized close to 100 million property records across these various states, whoever has put online. And we have put it into a queryable language where you can put queries and you can get data which is being structured through multiple iterations. Like a lot of this data is multilingual. The addresses are in different formats. So we have put this into a queryable format where you can get these property records. So that is one set of data. The second set is your listings data. So you have marketplaces. So our own portal, squareyards.com, it gets close to million odd listings. So from these, you get the asking prices, right? What are people asking? So these might not be realistic. Some people would put lesser price for getting a lead. Some people have higher expectations, but overall you get a trend. And then the rental listings also give you a trend because you can back calculate from a rental yield what would be the prices. The third set is the physical transactions which our team is doing on field the loans that we are doing, the actual value of the property. So feeding the valuation data done by physical valuers back into this, and then you triangulate all these three data sets and arrive at a estimated fair market estimated value, which may be at a certain accuracy level, but it gives you a very good insight on what would be the LTV, what would be my minimum risk level at which I would want to do a loan on this property. So, and then you can also build, as Priyam was saying, like build a 13-year record, title record based on these transactions. And the third is you get your credit score. You assess the personal eligibility of an individual from his income, from his salary slips and all. But a lot of these individuals, they have other properties also, right? So can we, and especially for the unorganized sector, a lot of people, home ownership in India is still at a higher level, right? It's at around 35-40% people who own some kind of home, maybe a kacha makan or in an unauthorized area. But can you get the property asset data of these individuals and add it into your credit score to assess like whether this guy has a few properties more which aren't disclosed, but you can get that data and build it into your credit underwriting, whether that person is safe to loan or not. So these are the broad set of 3 data sets which are available today, are public, but unfortunately not in a very consumable format. So we have tried to put those into a SaaS-based thing where you can get those data sets in an API format and used in your credit underwriting and DRE models.
Thanks, Vivek. And continuing the discussions from Vivek, Narendranath sir, I'll come to you. He spoke about the multiple data points and some inherent challenges also. But from a lender perspective, when you're trying to build your digital journeys and the models, and look at that so much data being called about that available data sources, be it on the RERA or be it on the SROs and all. What are the typical challenges as a lender that you face?
So, in the home loan, there are 2 things which is critical, which is legal and valuation. And land is a state subject. So if you see the title deeds, clearances, wordings, languages vary across a state lot. And even if you look at a larger state, it varies within the state. So today if you see where the empaneled lawyers are giving the legal report, there are a lot of calls each financier is taking, and it takes a lot of time to make those decisions. Similarly, coming to the property. So for a property, the first thing is that whether the property is approved or not approved, and who is the approving authority. And the second is the construction quality, land prices, and authorized construction, semi-authorized construction, unauthorized constructions. So it's a very complicated way to evaluate a property's actual price, market, which is the market price, and what is the distress value. So these challenges actually delay, which Vivek was also mentioning, particularly for the affordable segment, small ticket loans. How do we address that? If through AI and through automation, we can have this human decisioning getting transferred to database decisioning. Somebody who builds the logic for each of the districts of this country, depending on the local legal and the state laws, where once we put the data and the report in, the decisioning comes quite easily, and the decisioning is less human and qualitative. That's on the legal side, and we still face the legal problems across the country, because there is no such fintech player which is available, which is working in this space. Now the second one, coming to valuation. Valuation, there are already quite a few PropTech players, but they are more urban centric. Today, when we give home loan or we give an agricultural loan, it is across small cities, rural places, where the valuation is far more difficult, because urban valuation, like a metro valuation in case of Mumbai, wherever we stay in our flat, we know the valuation which is quite easy. So as these fintech players and PropTech players enter the smaller cities and resolve these complexities of property approvals, valuations, and make it simplified, then our turnaround time across the country will go down for all financiers. So these are the typical problem statements. What is the silver lining? Across the states, if you see, the governments are automating and digitizing the entire land records. The property approvals are becoming far more stringent. RERA is one of the law which has made the builders more accountable, more transparent, customer friendly. So considering the regulatory changes, the kind of automation the governments are taking and the fintech players are coming, we are here to see a much better future. Probably next couple of years, this will be far better organized, both in legal and valuation.
Thank you, Naz, sir. And it's really good in perspective, the typical challenges, right? Legal and then also the valuations to beyond urban, right? So, Amol, I'm coming to you, and I'm sure Bureau is not there to solve these two problems with the technical and the legal part of it. But how do you see Bureau adding beyond scores, right, normal, and that and the role of the data analytics to help that home finance to move to the next future, right? So where that you see the Bureau playing into the role?
Sure. I just wanted to give all of you a perspective. Out of 140 crore Indians, CIBIL has the data of 70 crore plus individual, borrowers. So that's a huge amount of data. Majority of them are credit active. And the younger population which is entering the borrowing market space is very credit aware. So they actually do take the effort to check the scores in advance. If they actually do a lot of credit education for themselves, CIBIL does have a program called Jagran or Saksham to increase credit awareness, and we enable them to have tools or awareness to increase their credit scores. Now, why did I give this background is basically when you ask me as to how do we do, more for the ecosystem and enable lenders, is we have a very advanced data analytics tool which not only uses the trended data, but also tries to give insights to the lenders as to what they can do more. And Priyam mentioned that, it's a 15 to 20 year, sort of relationship with the borrower. And, the other two panelists also mentioned about the challenges that they face. So one of the things we have seen is that while there's a high touch product in a mortgage, but when that customer is with you, his life cycle needs are going to change. And what else can the lender embed as part of the package to him? But how do they know in advance that there's a need coming in? So what we have also seen is as the economy gets digitized, when the borrower is checking his credit score, and we have data to back it up, is where he goes and checks their credit score also matters. So any of our customers who have their own app, and most of you have it, if CIBIL is embedded in that app and the customer has gone in and checked his score from there, from that whole borrower's app itself, versus going to a loan aggregator and checking the score, the profiles of both these borrowers are different. And then typically we'll go and check the score when there's a need coming up, or they need to improve their scores, or there's some credit event which is going to happen, good or bad. And which is a great driver in terms of not only reaching out to the customer at that point of time when the need is really urgent, but you can actually take a very good judgment call in terms of where and when that risk is emanating from. And this we have been able to really work with most of our customers in trying to ensure that the whole life cycle is embedded into the customer's journey. We are able to play that partnership role as an intelligence partner in that life cycle management that all of you do, and be there to support you in that risk decisioning, which doesn't impact your profitability and enables growth. All these three things are taken care of.
Thanks, Amol. And Vivek, how do you see this the data coming from the bureau as well as that all the technical the data that you are aggregating and synthesizing get embedded into that LOS platform of the bank? Because typically still I have seen banks working into that LOS for the home loan and all these things. Largely these two activities, the entire the legal and technical as well as some of the data analytics happen outside of the LOS. How do you see the entire ingestion getting into the LOS itself? Vivek, it was probably.
So, see, if you look at the current infrastructure from the banks, so they have a CRM, which is a lead gen engine, right, where all the leads come in. Then they have LOS, LOMS, LMS kind of system where these loans are processed and BRE is done. Then there is a credit engine, then they would do valuation on another system, and then the post-dispersal, post-servicing collection system is different. So from a customer perspective, right, all these systems don't talk to each other, and that's why there are a lot of leakages within this ecosystem as well. So from a technology point of view, probably if there is a one single integrated engine which actually can work across all of these stages, and for a customer it's seamless, right? From the point his inquiry is received to the point his loan is getting disbursed, and also post-servicing of the loan. So if all these disjointed systems can be integrated, and also fintech integrations within this entire journey. Let's say if you have to get a property valuation, so you just order a valuation from the same system, and then the valuers put the value, and you or you have to do a title opinion, or you have to do a property asset search. So from a technology point of view, I think a lot needs to be done, although it's getting there. But what we see from a fintech or PropTech perspective is that the pace of digitization is very slow. So we have been asking banks for the last 3 to 4 years, like, when is your loan journey coming onto API stack? They would say, okay, we are building the partner portal for now, you log in from there, and then we will process, and I have to give the login ID and password to hundreds of my sales agents. So what is actually needed from the industry is that the way personal loan journey has been digitized in the last few years, the way UPI has penetrated, the way e-signatures are being very common now. So can we look at, from a lending industry, can we look at this digital transformation to happen very quickly and at a very good pace, so that the entire ecosystem can benefit?
Thanks, Vivek. So I think we have a good future to look forward for the home finance. So I think this is good discussion going on, but without taking a chance from the audience to ask questions, I would request if anybody has a questions to any of the panelists or just an open questions, please feel to ask. Anybody? So I think it looks like most of them may have the same problem, and they are trying to solve the same solutions they might have got it. So I think it's great. I think we have a discussion. I think lots more happening from the home finance, from the data, government sources, right, and the technology player, the PropTech also adding lots of the value. But there are a lot more to happen in this industry, especially on the home loan front. So thank you everyone. It was lovely engaging with you all. Thanks.
Thank you, ladies and gentlemen. Can we give them a huge round of applause, please? Thank you. Now I would like to request Shashank sir, who's the co-founder and head of consulting at the Digital Fifth, to please extend a token of appreciation to our panelists in no particular order. Vivek Agarwal, co-founder and CTO, Square Yards. Then we have Narendranath Mishra, Head Retail and Agri Loans, DCB Bank. Priyam Alok, Deputy Managing Director, Saraswat Bank. Amol Joshi, Chief Financial Officer, TransUnion Civil. Gentlemen, I would request you all to please take a group photograph.